The hidden requirements behind business loans. Did you know that roughly 80% of all small business applications are denied? And the reasons that they are denied might surprise you. In this video, we're going to take a deep dive into the hidden requirements that lenders are looking for to approve your business loan. Hi, my name is Justin Murch. I'm the founder and CEO of Justin Murch Consulting, and we've helped thousands of clients navigate the tricky waters of getting funding for their business, whether it be business loans, business credit, and other different creative ways to help them finance their projects. So all of us know kind of the basics of business loans. We understand that for the most part, most lenders are going to want a personal guarantee, right? They're going to want you to have at least a 680 to 700 personal credit score. And you've got to think about the personal guarantee. It really kind of depends on where you're at in your business. Some financial institutions require personal guarantee, some don't. But many, when you're starting out, are going to want to see your personal credit. And of course, that makes sense from a risk perspective, because if you're going to start a business, the assumption is that you are well prepared financially and know how to manage your finances. Most people are going to also realize that they're going to want to see income statements, cash flow statements, probably want to have access to your QuickBooks, your management report. These are pretty standard if you're going to ask for a loan. Now remember, loans require a pretty heavy duty underwrite. It's not a situation where it's an automatic approval like some business credit is. So be prepared to give over information that you may or may not be comfortable handing over to a financial institution. And in many cases, financial institutions are also going to want to see a detailed business plan. They want to see where your mind's at and what you plan on doing with the funds and how you're going to grow your business. So even if you have these three things kind of checked off and you go to maybe a traditional bank, they're going to have other requirements, which we're going to dig into. You've got to think about it from a risk perspective. These financial institutions are all about calculated risk. You know, they make their billions and billions of dollars, and they don't do it by being willy-nilly with who they will help. And they don't make their billions by not being calculated in how they will take on risk. It's all about risk assessment. So one of the major things that financial institutions are going to look at is they're going to look at the risk of your specific industry. In small business, there is a ton of risk just kind of in general. The reality is that 2/3 of us aren't going to make it over the long term. So financial industries very much have this data kind of on the top of their mind when they're dealing with us. And they're also looking for really high risk industries. So you can do a quick Google search and you can figure out if your industry is high risk. They're also looking for high risk names. So if you have capital or investment or homes in the name of your company, or money anywhere in the name of your company, that's going to be considered high risk. So speaking in general, it makes more sense to be more vague about your company name than be more specific. And of course, if you do your Google search and you see that you're in a high-risk industry, it makes sense to make sure that your NAICS codes and your SIC codes are not high risk. As an example, real estate is historically considered high risk. The way that you kind of combat that is that when you're categorizing yourself, you'll categorize yourself as marketing, or you'll categorize yourself as a consultant. Both of those things are incredibly accurate, but they keep you out of that high-risk category. And then, of course, if you're in real estate, you also don't want to have real estate in the name of your company. It's a big thing where people make mistakes and don't realize it when they're creating their companies. Another thing that people don't realize is that when you're looking for your business loan, a lot of times they're doing what we call debt-to-income ratios for your business. And in general, they want that to be under 40%, 36% or so, meaning that if you have more debt then 36 or 40% of what you're bringing in, that's going to be considered a negative, right? That's going to be considered more high risk. And a lot of times what business owners tell me, and I hear this quite a bit, is, well, yeah, I have a lot of debt, so I need a business loan to get me through this next phase of my business because I'm augmenting the size. So I'm taking on a lot of debt right now, but I need some runway so that I can grow my revenue. Well, unfortunately, the time to get a business loan is not when you're in the scramble of kind of overwhelmed with debt. You know, you have to be a little bit conscious of kind of your numbers and what's happening, and you need to get way ahead of any potential issues. So the best time, and I say this all the time, the best time to get $1 million is when you have $1 million in the bank, right? They'll give you $1 million all day long. But when you start taking on way too much debt compared to what you're bringing in, of course that's going to be considered high risk. Business age is going to be another one of those things that people don't necessarily think about. In general, you know, there's like this 2-year mark of a company kind of being around. It doesn't mean necessarily that's a hard stop for all financial institutions, but generally speaking, they're going to want you to be over a couple of years old and show increasing sales, increasing revenue, to show that you have the ability to pay back the money. Business loans are difficult to get, especially for new businesses. In many cases, it doesn't make sense to even try to do all that. It makes more sense to build out your business credit and get your funding that way. Because within business credit, you can get all kinds of things to help you fund and grow your business if you build out your business credit properly. In many cases, lenders are going to require some type of collateral. Sometimes they'll put a 𝗖𝗂𝗂𝗏 lien over your company to kind of mitigate some of that risk, depending upon the size of the loan. It's very common. In some cases, lenders are going to also want a personal guarantee. And business owners have, various feelings about a personal guarantee. Some business owners are absolutely not into that. They're like, I'm not going to personally guarantee because I don't want the liability that comes with it. And then some business owners, regardless of kind of what they've got going on, they're okay with personally guaranteeing. Maybe they're in an industry where there's not a whole lot of liability, there's not a whole lot of lawsuits, so they're not really concerned about necessarily personally guaranteeing an item. But it's definitely something that you're going to have to consider, especially if you're just starting a business or you're considering going into real estate. Because as an example, for real estate, in almost all cases, unless you're doing fix and flips, you can do hard money loans and you can do, business credit to help with all that. But if you're trying to do an actual mortgage, in almost all cases, there isn't a way to not sign on that. I haven't found one mortgage company that will not have the owner personally guarantee a property if they're in real estate. Now, the last couple of items that these lenders are looking at that kind of have these hidden requirements is that they're looking for consistent revenue. In other words, if you've got limited revenue or no revenue at all, it's going to be difficult. It's going to be really difficult to get a loan. In general, what they're looking for is they're looking to see that you have consistent revenue, and also most of the time they want to see increasing revenue. In other words, if you had a couple of good years and now you're trying to get a business loan, but your sales are way down, that's gonna be a red flag for most financial institutions. The last kind of hidden requirement that business owners don't realize that's going on is that a lot of times lenders are going to look at your social media accounts. They're going to look at your reputation. They're going to look at Google reviews. They're going to look at all kinds of things to determine what your reputation looks like as a business. So if you don't have any reviews, or if you don't have a website, or if you don't have any way for them to kind of check things out, it could be problematic. Or if you have all that stuff set up, but you've got a lot of really bad reviews, it'll almost always result in a denial. Okay, so let me give you some steps to prepare for these hidden requirements by lenders. The number one thing that you need to do is you need to search your company on Google it to see if your industry is high risk. The second thing that you need to do, and this is really important, is you need to strengthen your financial credit profile. And that includes two things. First of all, make sure that your personal credit, make sure your credit cards are paid down. Try to pay down as much as you can to have the best and highest score. Again, it's all about risk for financial institutions, and they feel like if the owner is tapped out or if they're maxed out on their credit cards, then they're probably going to be in trouble paying back this loan. The next thing is not only to strengthen your personal credit profile, but also strengthen your business credit profile. Lenders are going to want to see that you've worked with dozens of other financial institutions and creditors. It's very important. If you have no business credit profile, it's going to put you at a serious disadvantage as they're doing the research and assessing risk to your company. If you want to have a detailed conversation about what that looks like for you, is business credit better for you? Is a business loan better for you? Is a line of credit better for your business? Feel free to click in the link in the description and request a business consultation, and we'll discuss what that looks like. We'll have that honest conversation so you can achieve your goals for your business, because it's the Wild West out there. Business credit, business funding is not regulated the same as personal credit. It's kind of all over the place and it's confusing. So the best thing to do is going to be to find somebody that you can have that honest conversation with. When it comes to picking a specific financial institution for your business loan, it's pretty tricky. Because if you go with your more traditional banks like Bank of America or Chase or any of those, they have very specific requirements. They want you to fit into this very square box, and you either fit into that box or you don't and you get denied. So there's lots of different financial institutions out there that would give small business a chance. Oftentimes it's not going to be your big box financial institutions. It may be your local credit union. It may be a regional bank. You may have to go into a bank, a smaller regional bank, and try to develop that relationship with the bank. You might have to move all of your funds to that bank. You may have to develop a relationship with their loan officer. You might have to talk to them about what you've got going on, drive a really good case for why you need the funds. A lot of times there are relationship banks that, instead of being a situation where you fit into the box, they'll actually take your situation case by case and they'll present it before the board of the bank, and it'll make a decision that way. So there's lots and lots of different ways to get things done. You may not necessarily go the path that you may think you need to go. It may be a different type of a path. And this is why it's really important to get in contact with somebody that knows the industry, understands your goals, and can help you achieve what you're looking for. Getting approved for a business loan can seem overwhelming. Getting funding for your business can seem overwhelming. But with the proper people in your court and the proper preparation, it's all entirely possible. Please like and subscribe to my channel and follow me for more content that's going to help you grow your business.